Hello, traders. Kozovic comes to you from theclosingprint.com, June 16th, 2024. In this edition of your weekend video newsletter, we'll discuss the indices and the markets with tech strong, semiconductors higher. Overall, market momentum has slowed and breadth is deteriorating. We have 5 bullish indicators, 4 neutral, and 11 bearish. That's the highest number of bearish indicators we've had since the April consolidation. The New York FANG index and these 10 stocks remain fairly strong, with the index closing at all-time highs, up 60% on the year, giving us reason to believe tech could continue, as confirmed in the NASDAQ 100 Technology Sector Index, NDXT, closing at all-time highs. Momentum is clearly bullish, along with the ARCA Institutional Index. These 75 stocks are the most commonly held in institutions' core portfolios. We always watch these and the index, with Elder Impulse giving us green sticks for the last 2 weeks, getting a bit extended from the 21-day. That said, check out the names in the list. These are where we're seeing some strength. While the majority of stocks are printing lower levels and breadth, many of these stocks continue to rise to all-time highs. That said, let's look at the bearish side of the equation. We have the McClellan volume oscillator still moving lower. We're getting close to the green zone, so that would be an area where we'd look for a bounce. While the New York Stock Exchange did make more new lows than new highs, as this indicator dropped below the zero line, the histogram printing a red bar. Moving averages continue to move lower, lower highs, lower lows. New York Stock Exchange advanced decline also broke this trend, so we're seeing a lower low there as well. And we have red elder sticks on this index of 2,000 stocks. We also have the S&P 1500 composite, made up of the S&P 500, S&P 400 mid caps, and S&P 600 small caps, peaking, starting to show signs that might turn lower. Histogram is below zero, and we're coming off the upper Bollinger Band. Possible that we come back and test the moving averages on all of the indices we've just covered, with the S&P equal weight index giving us a neutral to bearish signal if we lose that trend line, and the number of stocks trading above their 20 in the upper panel and the number of stocks trading above their 50-day in the lower panel continue lower. That would add to the negative breadth, as we indicated with the number of bearish signals that we had starting the week. Additionally, we had small caps deteriorate yet again for a 4th week. We've moved lower, closing on a long-legged doji in the lower half of the weekly range, headed towards that moving average. We're near a breakout level, so there's a potential for us to bounce as well. And small caps lead this week. If there is some rotation, we'll be watching for it. For now, this tells us to be cautious and consider selling call credit spreads on stocks that are reflecting weakness. Advanced decline percent, another breadth measurement, giving us bearish signals. If we get down to the minus 30 zone, this would be an area where we start to look for a bounce, in addition to maybe the small caps bouncing off that previous breakout level, adding to some potential for a bit of rotation if we do see XLK and SMH, the leading sectors, fall off a bit, and these sectors over on the left start to show strength. We could get some rotation into these defensive names, which would hold the indices near all-time highs if we just move sideways. So that's something to consider as well as we start the week. From an investor's perspective, we continue to see strength. TRBCX, T. Rowe Price Blue Chip Growth Fund. This is a barometer and one of our indicators Whenever this is moving higher above its 10 EMA, we are bullish for the long term. So if you have investments in your 401k or IRA, I'd be looking for a top like this over here on the left that we saw back in 2021. For now, this looks like bullish momentum will continue into what's typically a bullish period going into a presidential election. Junk bonds are holding up above their 21 and 50-day moving average. So while not the best setup, it is more bullish than bearish. We're making higher highs and higher lows. At the same time, the 10-year pulls back to the lows of the week, sliding along the lower Bollinger Band. RSI is below 50. MACD and stochastics show bearish momentum. So that's good for bond traders who were active in TLT last week. You can see the volume is starting to pick up. So if you want to hedge your portfolio, if we do start to see something more than just rotation, you could always think about maybe buying some dips on TLT. If that continues and the 10-year yield drops off, look for TLT to move higher. One of our neutral indicators this week was the US dollar. It hasn't moved much over the last week. It's hanging out at the 50-day. If this starts to bolt higher, that would be bearish and a headwind for equities short term over the next week or two. If it moves lower, that would be bullish. So you might ask, well, what if it moves sideways, Vinny? Well, that would be a decent outcome as well. And we'll let you know if there are any bullish or bearish signals this week during the live broadcast. Keep an eye on gold and silver as well, as these commodities have started to show signs of basing at highs. If the dollar does move a bit lower, that could impart a bullish breakout in gold, as it takes more dollars to buy the same amount of gold. Gold will move higher, along with silver, consolidating after a 3-week pullback from the highs at the 50-day. 50-day is pointing up and to the right. Bollinger Bands capture 95% of price action usually, so we'd expect to see prices stay between these levels. If that imparts a bullish rally off of a weak dollar, then look for that upper Bollinger Band as your target over the next couple of weeks. MACD and stochastics look like they could turn. Stochastics is oversold. Look for a bounce in gold and silver to start Monday trading. Additionally, the copper metal, a barometer of economic weakness or strength. We'd like to see this bouncing, confirming that the economy is fine. Momentum is starting to change after a 3 to 4 week pullback. We're looking for copper to get back above its 50-day moving average. That would reflect well on construction-related names like builders and suppliers, which would also reflect on home improvement stocks like Home Depot and Lowe's. We did a trade on Home Depot last week on Tuesday. Lee Starr mentioned it on Monday, I believe. It gapped up on Wednesday. We took some profits. We're looking for consolidation, looking for a follow through. The moving averages are all turning, so this might be a candidate for put credit spreads as well as call verticals, or just buy shares and sell covered calls if that's your inclination going into hurricane season. While we consider all of those scenarios for potential long setups going into the summer and fall over the next couple of months. Finally, we're looking at oil and gas, a little bounce off of the previous lows that we saw to start the year. Looking for rejection as the 50-day rolls over, potentially giving us a bear cross through the 200-day. At the same time, we're looking for commodities to continue lower into this sideways consolidation. At the same time, we'd be looking for the ratio between S&P 500 and commodities to continue. That would give us a bullish signal into year end. For now, we've got bonds, yields, the dollar, commodities, overall giving us neutral signals to start the week. As we reflect on sectors, in particular the consumer discretionary versus consumer staples ratio, over the last few months, this turned more bearish, which was telling you that institutions were positioning more bearish in the defensive sectors. This is starting to show signs that we could be turning as the shorter term moving averages, the dotted blue line and the red line, start to turn. This could be indicating that they're taking profits in some of those defensive sectors at highs into that strength, as we can see with XLP, which has been trending. Look for strength into all-time highs. We also need to consider the 22 sectors that I follow. 12 of them are the major spider sectors. 4 of the major spider sectors, materials, energy, financials, and industrials, are all showing weakness. They're below the 50-day moving averages, which is the value sector, and the sector that has been fairly weak compared to the growth sector. You can see value has been moving sideways. There is a potential for this to rotate in and tech take a breather, pull back a little bit for a couple of weeks, and both of these strengthen going into the presidential election in November. For now, though, everything that we've covered thus far in this week's video is telling us to be cautious, as most sectors are fading, with tech and semiconductors that are holding up the markets going into a seasonally strong July for technology. So if you've been following today's video, you can see that commodities, bonds, yields, equities are all giving us signals to be a bit more cautious to start the week. Yes, tech could continue higher, and these IBD 50 stocks could be part of the rally or a weakness. So we want to be looking for stocks that have stochastics turning from oversold, MACD up and to the right, and RSI at least above 50 and trending higher. With the names in the list below, candidates that have already scanned for potential follow-through. The ones with the asterisks are stocks that I'm thinking about credit spreads on, while the rest are either trending or bouncing off of support, looking for higher prices. Arista Networks reported earnings on May the 7th, beating expectations. With substantial revenue growth and earnings growth, we're looking for this stock to continue to move higher. Supplier of cloud networking solutions that play into the whole AI strength, with most technology sector management teams giving us reasons to be buying the dip and looking for follow-through. Arista Networks is one of those. Trading at 52-week highs, MACD and stochastics are bullish. Volume going into Thursday was ramping up. Bollinger Bands opening up. There's a possibility this one continues higher. I would look for a consolidation. 921.50, 200-day, all pointing up and to the right. There is the potential that we could stay inside of the Bollinger Band, so any break to the upside would definitely be a bullish outcome to start the week. Looking for other stocks in the industry group to move with Arista Networks. ARM Holdings trending with a Thursday and Friday doji whipsawing investors. That said, RSI is showing strength of trend, showing muscle. MACD showing momentum is clearly bullish. We did have above average volume on Friday selling. So with that in mind, we'll look for consolidation, as it's made quite a run since the 120 level, gaining more than 40 points before seeing some selling on Thursday and Friday. Look for a follow-through in ARM Holdings after a bit of consolidation. AeroVironment in the aerospace, military, and defense industries. This continues to move higher. The company makes unmanned aircraft systems, tactical missile systems, and related services within the Department of Defense. Note the earnings growth and revenue growth. Earnings surprise was 65%. Last time around, it reports again on June 26. Looking for AeroVironment maybe to consolidate a bit. It's above its 9, 21, 50, and 200-day moving averages. Everything is bullish. Look at the muscle in RSI showing a strength of trend is persistent. as the ongoing war in Ukraine and Israel-Hamas conflicts continue to impart a bullish follow-through in many of these aerospace and defense names. Celestica, another IBD 50 name, dipped recently and started to follow through. MACD and stochastics are turning. I like when stochastics turns in this respect. Looking for MACD to continue higher. I'd like to see more volume too. With the company reporting again on July 24th, you can see this is a conglomerate. Celestica is in communications, consumer diversified, industrial, aerospace and defense, healthcare, solar, semiconductor equipment, and other servers and storage end markets. So the company does a little bit of everything in several industry groups with decent revenue growth and earnings growth, supporting its bullish trend near 52-week highs. RSI is still above 50. Maybe this consolidates a little bit more. Watch this one for a follow-through this week. Recall that copper recently pulled back for the past 4 weeks, 5 weeks. We're looking for copper to move higher. That would reflect strength in the economy. Also, Centos, which is a company that has over 1 million customers worldwide, providing corporate identity programs, operating in 4 segments: rental uniforms and ancillary products, uniform direct sales, first aid, safety and fire protection service, and document management services. The company is considered an economic barometer when it's moving higher. We're looking for strength in the economy, and when it's moving lower, we're looking for weakness. Basically, it's a risk on, risk off signal. Therefore, with the strength that we're seeing, looking for Centos to break out the 52-week highs. Note the volume, stochastics, MACD turning up, RSI rising. We're above the 50-day, move back above the 50-day at the end of May. This volume by price area over here on the left, indicating that once we move above this area, there's going to be very little supply, as the stock is making all-time highs. Centos RSI showing strength of trend, MACD and stochastics supporting a follow-through, and volume indicating institutions have been buying shares after the dip below the 50-day 3 weeks ago. Google in the communications sector holding near 52-week highs. Bollinger Bands are tight, RSI is above 50. Volume shows institutions have been buying shares at all-time highs. While we're looking for direction, either it breaks above these pivots and gives us a bullish spin, or it breaks down and starts to head towards the 50-day, all of which we'll be following during the live sessions in the trading room this week. Hims and hers, again on the IBD 50 this week. Very bullish trend over the last 4 weeks, making 52-week and all-time highs. The stock showing strength of trend, volume indicating institutions have been picking up shares. It feels a bit extended. I'll be watching it this week. The company seeing a lot of bullish activity in the options market over the last few trading days of the week, with some fairly large trades above the ask out in August and in January, notable as potential trades going forward. Could be some option selling as well mixed in there. So we're looking for a follow through in HIMS. Maybe it consolidates a little bit in the short term, as it is a bit extended. But every time we've thought that that was going to be the case, it continues along its upper Bollinger Bands with strength in RSI, reflecting a persistent bullish trend. Novo Nordisk and Lilly have been seeing strength. Both of these moving higher, looking for follow through, especially for the obesity drug outlook. Among other things from these two companies, the trend is clearly bullish. In Lilly and Novo Nordisk, RSI near 70 or above. 921.50, 200-day are all moving up and to the right. Palantir Technologies back on the IBD 50, broke back above the 50-day moving average over the last 2 weeks, continues to show strength. RSI is rising, MACD showing bulls are in control. Volume is a little suspect, but this might be something that some of you are interested in. Looking for a follow-through, higher highs and higher lows back to 52-week highs in the short term. Ritchie Brothers Auctioneers, volume well above average last week. looking for a breakout to 52-week and all-time highs, with the company not reporting again until the second week of August. An auctioneer that uses innovative approaches to its auctions throughout North America, South America, Africa, and Europe, reflecting on its bullish breakout of this larger consolidation during 2023, broke out and now looks like it's going to follow through. The 10 EMA is up and to the right on this weekly time frame. Look for prices to continue higher. Some of the stocks that showed up on scans like AOSL, Alpha and Omega Semiconductor, nice bullish trend. One of those stocks in the semiconductor industry reflecting strength. Reporting again in August. Company has earnings growth of 200%. Earnings surprise was 387% last time. 13% revenue growth. Supplying a broad range of power semiconductors for computing, consumer electronics, communications, and industrial applications. Potentially continuing out of this cup and handle pattern to start the week. Interesting to note that many of the banks looked very strong last week. Bank of America, they don't report again until mid-July. Goldman Sachs, a favorite, looking for this one to bounce. It's been fading for the last 4 weeks, looking for a bounce near the 50-day. Watch RSI. Again, these report in mid-July. With Goldman reporting on July 15th, the last time around, they beat expectations. Some decent revenue and earnings growth. An earnings surprise of 23%. When all four of these are green, that's a good indication we could see some follow-through in the stock if it manages to find some buyers near the 50-day in the short term. Watch stochastics and MACD for a turn and for volume to start picking up with RSI back above 50. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, June the 16th, 2024. Be sure to check out some of the names in the list below, especially those in the scans and stochastics oversold category. And look for that email in your inbox after about 12 o'clock midnight or 9 o'clock p.m. on the West Coast. Have a great weekend. Enjoy your Father's Day. Take care, and we'll see you in the morning. Ciao.